What if I told you that while you were sleeping, a silent financial revolution has been unfolding that could fundamentally reshape the entire global economy? We're not talking about another crypto pump and dump scheme or the latest meme coin craze. We're talking about the systematic dismantling of Wall Street's trillion-dollar intermediation model through the most sophisticated blockchain infrastructure the world has ever seen. Right now, as I'm recording this video, tokenized asset issuance on the XRP ledger has exploded from just $5 million in January 2025 to over $118 million by July, a mind-bending 260% increase in just 6 months. But here's what most people don't realize. This isn't just growth. This is the foundation being laid for the complete transformation of how money, assets, and value move around the world. By the time we're done here today, you'll understand exactly why the world's largest institutions are quietly positioning themselves for what could be the biggest wealth transfer in modern history, and why XRP sits right at the epicenter of this transformation. So grab your coffee, hit that like button, and let me show you the data that will change how you think about the future of finance forever. The tokenization explosion, $25 billion and accelerating. Let me start with some numbers that will absolutely blow your mind. The real-world asset tokenization market reached $25 billion in Q2 2025, representing a staggering 245-fold increase from just $85 million in 2020. But here's the kicker. This isn't some speculative bubble. This is institutional money moving into blockchain infrastructure at an unprecedented scale. BlackRock, the world's largest asset manager, now operates the BUIDL fund with $2.89 billion in tokenized U.S. treasuries, making it the flagship tokenized money market fund globally. This fund alone represents 40% of the entire $7.34 billion tokenized treasury market and experienced explosive growth of approximately $1 billion between March and June 2025. When BlackRock CEO Larry Fink says that every stock, bond, and fund can be tokenized, revolutionizing investing by keeping markets open continuously and clearing transactions in seconds instead of days, you better believe he's not speaking hypothetically. Franklin Templeton follows close behind with their Benji tokenized fund managing $776 million, while the broader tokenized money market and treasury fund assets surged 80% year to date, totaling around $7.4 billion in 2025. But here's what makes this even more incredible. Over 200 active tokenization projects now boast a combined total value locked of $65 billion, representing an 800% increase since 2023. But here's where XRP's advantage becomes crystal clear. While other blockchain networks struggle with high fees and slow transaction times, the XRP ledger processes transactions in 3 to 5 seconds with average fees of just $0.0002. That's 2/100 of a penny compared to Bitcoin's multi-dollar costs and Ethereum's $7 to $12 fees during network congestion. This performance profile makes XRPL uniquely suited for the high-volume, low-margin world of institutional tokenization. Institutional adoption. The numbers don't lie. Now let's talk about institutional adoption, because the data here is absolutely staggering. Over 300 financial institutions across 45 countries now use RippleNet infrastructure, with 40% actively deploying on-demand liquidity corridors powered by XRP for cross-currency settlement efficiency. This isn't theoretical adoption, this is documented, measurable institutional behavior. Ripple's on-demand liquidity service processed an incredible $1.3 trillion in cross-border transactions during Q2 2025 alone, representing a 32% year-over-year increase in institutional usage. To put this in perspective, that's more transaction volume in 3 months than many entire countries' GDP. RippleNet processed $15 billion in total volume during 2024. With $2.3 billion in cross-border flows in Q1 2025 alone, driven by high-volume corridors like UAE, India, and US-Mexico transfers. The regulatory clarity achieved in 2025 has been nothing short of game-changing. On the 3rd of July, 2025, the SEC formally dismissed its remaining claims against Ripple, establishing definitively that XRP is not a security when traded on public exchanges. This resolution removed the final regulatory overhang that had impeded institutional adoption since 2020, and the results have been immediate and dramatic. 11 major asset managers have now filed XRP ETF applications, with Bloomberg analysts assigning a 95% probability of approval by the end of 2025. ProShares Ultra XRP ETF launched in July 2025, marking the first SECN-approved XRP investment product and attracting $1.2 billion in assets within its inaugural month of trading. This represents the fastest ETF launch in the exchange's history and demonstrates unprecedented institutional appetite for regulated XRP exposure. CME Group achieved a historic milestone, with XRP futures becoming the fastest contract in the exchange's history to cross $1 billion in open interest. This rapid uptake by institutional traders underscores the maturity of XRP's financial infrastructure, with deep liquidity pools, regulated clearing, and standardization of contract terms enabling large-scale hedging and risk management strategies. Central bank digital currency integration. Government validation. Perhaps the most significant validation of XRP's institutional infrastructure comes from central bank partnerships. Ripple has disclosed partnerships with at least 10 central banks, including Bhutan, Palau, Montenegro, Georgia, and Colombia, to pilot retail and wholesale CBDCs on XRP Ledger technology. The European Central Bank selected XRP Ledger for its 12-month digital euro pilot, involving over 500 financial institutions across the Eurozone. This pilot tests real-time cross-border payments, regulatory compliance, and interoperability across jurisdictions, demonstrating XRP's suitability for large-scale public financial infrastructure. When the ECB chooses your technology for continental monetary system testing, that's not just adoption, that's systemic validation. Bhutan's Royal Monetary Authority is piloting a digital Ngultrum aimed at driving financial inclusion from 58 to 85% of the adult population using Ripple's carbon-neutral platform. Montenegro's pilot focuses on national stablecoin issuance for domestic payments and selective cross-border settlements, while Georgia's digital lari program tests automated compliance and reserve management features. The Swift disruption, a $44.8 million daily opportunity. Let's talk about the elephant in the room, Swift disruption, because the numbers here are absolutely mind-blowing. Swift processes an average of 44.8 million messages per day across its network of over 11,000 financial institutions, charging $26 to $50 per transaction compared to XRP's $0.0002 fee. When you scale this cost differential across global payment volumes, the economic opportunity becomes astronomical. Traditional SWIFT corridors average 7.1% in total cost for low-income destinations, while RippleNet remittance corridors charge approximately 0.3%, representing a cost reduction of over 95%. But it's not just about cost. SWIFT transactions require 1 to 5 business days for settlement due to multiple intermediary banks, while XRP transactions settle in 3 to 5 seconds with 99% success rates. The infrastructure costs tell an even more compelling story. Traditional global payment systems incur an average cost of 20.9 basis points across 6 major components, while using Ripple reduces cost to 14.1 basis points, and combining with XRP drops cost further to 12.2 basis points, achieving a 42% reduction in total infrastructure expenses. Banks utilizing XRP for cross-border operations report 90% fee cuts compared to traditional correspondent banking systems, while eliminating the need for pre-funded nostril accounts that typically lock up 60% more capital than necessary. And you guys, I have a special trick for you which nobody seems to be using, and I cannot wrap my head around why, because if you sign up through my link down in the description onto the BuyDefi exchange, you get a 10% deposit bonus, and now stay with me here. Now, here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BuyDefi account, you get on top of your capital. You moved another 10% extra trading capital. As an example, if you move or deposit $10,000 to your account, you get a $1,000 for free. And here is why this is possible. BuyDefi makes money on trading fees. The more capital you have, the more you trade. The more you trade, the more they earn. So they're literally investing in your trading activity by giving you extra capital up front. And unlike other platforms where bonuses are in the 1 to 3% range, Buy DeFi's bonus is a full 10%. I am not kidding. I really don't understand why nobody is doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I kindly ask you to pause this video and take your time to make an account. You can thank me later in the description of this video. Alright, let's jump back into the video. Real estate tokenization. The $4 trillion transformation. One of the most dramatic examples of this transformation is happening in real estate. Deloitte forecasts that tokenized real estate could swell from under $300 billion in 2024 to over $4 trillion by 2035, a compound annual growth rate exceeding 27% as investors seek programmable fractional exposure to high-value assets. The Dubai Land Department pioneered something unprecedented as the first government real estate registration authority in the Middle East to tokenize property title deeds on a public blockchain. This isn't some experimental pilot, it's a fully operational system where fractional real estate ownership updates the official land registry in real time with every token transfer, while maintaining legal enforceability and regulatory compliance. Traditional real estate transactions involve multiple intermediaries, including brokers, custodians, registrars, and legal representatives, each extracting fees and adding delays. Tokenized real estate on XRP rails eliminates these middlemen through smart contracts, enabling fractional ownership with instant settlement and transparent ownership records, while significantly reducing transaction costs. Corporate treasury revolution. The corporate treasury revolution is equally dramatic. More than 60 companies have filed or announced strategic XRP reserve allocations for treasury operations, including major corporations like SBI Holdings, Trident, Vivo Power, and numerous others. But this isn't like early Bitcoin treasury strategies. These companies are incorporating XRP directly into their corporate financial architecture for utility, not speculation. Link Logis, a Hong Kong-listed supply chain fintech, processed $2.9 billion in tokenized cross-border trade assets using XRP infrastructure during 2024, demonstrating blockchain's capability to unlock previously illiquid trade finance markets. This showcases real-world utility beyond speculative trading patterns, improves the technology's capability for massive institutional applications. Investment groups like Armada 2 and Arrington Capital are entering through SPACs specifically to focus on the XRP ecosystem, reducing reliance on passive token holding and incorporating XRP into the corporate and financial architecture itself. Stablecoin infrastructure. The $27.6 trillion bridge. The stablecoin revolution provides the bridge connecting traditional finance to this new tokenized world. Stablecoins processed $27.6 trillion in transfers during 2025, completely surpassing the combined transaction volumes of Visa and MasterCard. This massive scale demonstrates that stablecoins are no longer experimental tools, but essential infrastructure for cross-border payments and institutional adoption. Ripple's RLUSD stablecoin. Launched in December 2024 with full regulatory approval from the New York Department of Financial Services, represents a strategic move to capture this massive opportunity. Each RLUSD token is fully backed by US dollar deposits, government bonds, and cash equivalents, with monthly attestations published by independent auditing firms. The stablecoin operates on both the XRP ledger and Ethereum, providing dual-chain functionality that enables institutional adoption across multiple use cases. Unlike ERC20 tokens that suffer from Ethereum's congestion and high fees, RLUSD settlements on XRP rails complete in under 5 seconds with fees measured in fractions of pennies. Cross-border payment volumes using stablecoins reached $5.7 trillion across 1.3 billion transactions in 2024, with the first half of 2025 already approaching $4.6 trillion across 1 billion transactions. Companies like BVNK report $15 billion in annual stablecoin payment volume, while Conduit processes $10 billion annually, representing approximately 20% of the global B2B stablecoin payment market. The institutional cryptocurrency revolution. The institutional cryptocurrency adoption landscape has transformed dramatically in 2025. 86% of institutional investors are either already invested in crypto or planning strategic allocations, while 59% intend to allocate more than 5% of their assets under management to cryptocurrencies. The SEC's Project Crypto initiative, led by Chair Paul Atkins and Commissioner Hester Pierce, explicitly stated that most crypto assets are not securities, enabling modernized custody rules and clearer market participation guidelines. This regulatory clarity has unleashed institutional capital, with BlackRock's Bitcoin ETF reaching $60 billion in assets under management alongside the growing XRP infrastructure. Global crypto ETP volume surged in 2024, with crypto exchange-traded products reaching $134.5 billion in assets under management and $87.5 billion in trading volume, indicating rising institutional interest in digital assets alongside XRPL innovations. The timeline for total transformation. The timeline for mainstream adoption is accelerating faster than most people realize. Within 12 months, corporate treasury pilots and regulator-backed tokenized security trials will expand significantly as institutions seek competitive advantages through reduced settlement risk and operational costs. Within 3 years, liquidity pools for tokenized bonds, commodities, and real estate will reach critical mass as traditional asset managers launch compliant token offerings to capture yield premiums. Over a 5-year horizon, leading custodians and clearinghouses will migrate core settlement infrastructures onto blockchain rails to remain competitive. Accenture estimates that blockchain technology could reduce reporting costs by 70% through streamlined data quality and transparency measures, while central operations costs could fall by 50% through reduced know your customer and client onboarding expenses. Business operations costs, including trade support and settlement processes, could decrease by 50% through elimination of data reconciliation and transaction confirmation requirements. The inevitable conclusion. The convergence of regulatory clarity, institutional adoption, technological innovation, and vast addressable markets has positioned XRP at the forefront of the next financial paradigm. We're witnessing the systematic transformation of global finance from analog processes to programmable, digital native flows of value that operate at internet speed. This isn't speculation, it's documented institutional behavior happening right now. Over 5.3 million XRP wallets exist globally, with institutional engagement through OTC desks accounting for 19% of trading volumes. The correlation between increases in tokenized asset issuance, transaction volumes, stablecoin circulation, and XRP price suggests that market sentiment increasingly views XRP as utility infrastructure rather than speculative asset. Wall Street's traditional moat control over clearing, settlement, and custody is eroding as blockchain rails become the new plumbing of finance. Financial institutions that rapidly integrate blockchain-native infrastructure will capture new revenue streams estimated at $15 to $30 billion annually from servicing digital assets, while those that resist will face margin compression and market share loss to blockchain-native competitors. The question isn't whether this transformation will occur, it's how rapidly institutional adaptation accelerates as competitive pressures mount and efficiency advantages become undeniable. We're at a tipping point where programmable, borderless money is no longer theoretical, but an unfolding reality, reshaping the very foundation of global commerce. If this breakdown of the XRP tokenization revolution opened your eyes to what's really happening in global finance, make sure you smash that subscribe button and hit the notification bell so you don't miss my next deep dive into the projects that are quietly reshaping the world economy. The programmable money era isn't coming, it's here. And now you know exactly how it's unfolding and why XRP sits right at the center of the biggest financial transformation since the invention of banking itself.